Hello, everyone. Welcome back to the RationalInvestor.com's Weekend Frivolity. This is our Broiler Chicken Show. Bark, 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 bark. So thankful for having Chris now helping with me with the Broiler Chicken Show. Sure makes loading these up on the weekend nice and easy. And actually, he and I and another gentleman, Andre, had a great conversation about astrological charts on Friday evening. I guess that was probably Saturday morning for Chris. I don't know, Chris. Did you see Andre's latest spreadsheet that he put together? So he's actually put all the upcoming EVUs on a nice little table. So, hey, is that you there, Andre Code? So super cool. And now what I want to do, if we can, on the spreadsheet is we'll put all the markets that we're going to follow and what their prices were on these pivot points. I really look forward to this. This is a fun new project that I hadn't talked to Andre in a while. He's such a great trader. He loves these celestial things. Like he's got some really cool charts that he was sharing with me. Mind you, they're probably all gone now. But of all the upcoming EVUs and stuff, and Andre's he was about one of the only people over the past few years who really bought into this whole EVU concept. But you can clearly see, on some of these pivots, holy moly, the market really just pivots right after that. So it's usually a pretty good sort of backdrop. Look at this one. As soon as it happened, and then the market just fell apart following again here. Look at this one. Holy moly, who's this? Oh, the NASDAQ. So you can see these celestial pivots, man. They're dramatic when they come in. Holy moly. This is a EVU 120. Oh, yeah, 120s are big. And actually, I just figured out sort of an added feature why actually this makes a lot of sense. Because it turns out that Venus actually orbits the exact opposite of what Earth does. And Venus is just about the same sort of size as Earth. Slightly different, but very, very similar. So they orbit in opposite directions, and it reminds me a lot, and I was trying to explain this to somebody else, but the whole concept is Earth spins one way, Venus spins the other way, so the energies go flying out into the universe. But Uranus is a funny planet. It doesn't spin the same direction that all the rest of the planets spin. It actually spins on its side. So what ends up happening is the energy that's, I guess, directed towards Venus, instead of any other planet, if it hit it, think of like a wheel. If you a wheel that's spinning on its side, just like all the planets, if it's spinning around, if you throw something at it, it's just going to ching, right? It's just going to literally deflect off of the spinning orbit and head out in a tangent, sort of like what would be a good analogy? If you've ever actually, a really good analogy is if you think of a motorcycle wheel, all right? And so think of like the planets as the motorcycle wheel. Think of like a gyroscope, when it's spinning on the ground, right? But Uranus doesn't spin that way. It spins a completely different way. And so it's kind of like, think of that wheel. What happens if you throw something right at a spinning wheel? Like, why is it hard to knock over a motorcycle as it's heading down the road? It's actually extremely difficult because of this thing called centrifugal force. So if you think about that and the way that Uranus spins, and then you have Earth and Venus sending out their energies, their orbital energies, and they're almost exactly equal. So when those energies go out and they hit Uranus, and it's like a 90-degree angle, so in essence, just basically it just ricochets right off of Uranus and bangs right against Earth. I have a feeling that's a big part, and I don't know whether I've explained that or not, but it was kind of a cool revelation that came to me this weekend was the fact that Venus actually spins the exact opposite way as Earth. So you could almost think of it as they're almost like countervailing forces against each other. So long and short of it here is when these angular relationships happen, we often see really interesting, more sort of anecdotal evidence to work with in the market. And what I found is I don't really want to have an opinion over what works and what doesn't. All I want to do is ask what does work and what doesn't. So if I keep seeing stuff like this, where you have these angular pivots and we're heading up into this event, then all of a sudden the trend turns down, starts heading down. Well, that's information. Could it be like the, you throw your dog food in the dog bowl, and if it lands on the left side of the dog bowl, well, that's a buy signal. If it lands on the right side, that's a sell signal. And if it works, hey, I got to start watching which side of the bowl the food lands on in earnestness. So it's just more anecdotal information. It's another very unique, very unrelated reason to consider risking money or taking money out of the market. And I love it. It's just, it speaks to me. So that was a big fun thing of sort of getting settled into my new digs here. And I had a great opportunity on Friday night to hang with one of my favorite Italians who's relocated to Australia. And he's even like, why the fuck did I come to Australia? Which I thought was great. I'm sure he's loving. Yeah, there you are. Hey, it's probably better than going to Canada right now, but why don't we make a deal? Let's hook up in Portugal. I mean, what the hell? It's a totally neutral place. Nobody likes Portugal. And Andre, I was showing a couple places in Portugal, and he's like, that's not bad. We could hang out there. So gotta say, I sure am warming to the idea. The only problem I have, and everybody knows my major problem, is what do I do about the boy? So obviously, the boy and I are joined at the hip, and he is low functioning. So he is basically dependent on me, and of course the state. But if I just leave it up to the state, oh God, who knows where the hell he'd end up. So obviously he's priority number one. And of course, I got to tell you, man, when all of you wish me good luck with Liam, every time I do one of these, actually, it's Thursday afternoons. We go for our major jaunt around the Lower Mainland. It's a good 3-4 hour car ride. And this afternoon, every Sunday, we do our 3-4 hour car ride. When I get that positive feedback from you, God, it's miraculous. It's beautiful to see. And again, I asked this past week if you guys could pass some PMA on to him, and he was in pretty good spirits. So anyway. Okay, blah, blah, blah. Who knows where the hell I'm going to the start of this. Keep in mind, these Sunday shows, I don't know whether I'm doing this right or not. It looks like there's about 20, 30 people over there on YouTube. So hello, all of you. These Sunday shows I like to do for the level 1 class as sort of a dogtail for them. But, level 2ers were asking some interesting questions over the past week or two that Kieran was kind of like, I don't know what Brian's referring to, so you might as well ask him directly. So any of you level 2ers, you remember there were a couple questions out there. Feel free to add them to the Q&A document. And, of course, level 3ers as well. Actually, one thing I did see that was kind of cool, and I wouldn't mind, a big part of crypto is crypto had to grow up. Keep in mind, I come at this from a financial planner's perspective. I was a broker. I was a prop trader, kind of, long history of financial planning and all that kind of crap, right? We're actually working in sort of the adult crypto space, if you will, now in the stock market, what you guys call legacy markets, which I find hilarious. one gentleman on the site actually brought to our attention recently that there is a sort of I'm not quite sure how to describe it, but I think he's calling it like a decentralized attempt at options. Well, it looks like the level oneers are done. Thank you, Griminator. Thank you, Josh. Yeah, it's beautiful karma, like you and I really do think it makes a difference in his life. That if all you guys just send out some positive sort of cosmic waves to him, it really does make a big difference. Anyway, where was I? Somebody on the lounge, one of our favorite guys, Zoogie Sticks. I love his name. Totally unique, very original. He had pointed out that crypto is trying to go decentralized with options, which I thought was really kind of cool. I don't know. I'm not endorsing these guys, so please don't think this is some sort of shill or sales pitch. I have absolutely no idea. I mean, I'll accept and want to join. It looks all nice and pretty and stuff. Way to go. I'm sure there's probably other things that I have to do, but anyway, I'll come back to that later on. All I just wanted to mention was Zugi was saying that these guys are trying to do decentralized options, and we, of course, teach some very basic options principles in our level 3 course. And I wouldn't mind, maybe we even, maybe we'll even do like a weekly write-up or something for these guys. In fact, I think I even said something along those lines. Either one of the current level 3 students. We also have an options trading group. We haven't really been that active in options right now because options are kind of funny reacting in this silly volatility. But it might be interesting to see whether our TRI group, if we want to get sort of an options commentary, you could probably do something really simple like what's the maximum pain sort of threshold, where are institutional players establishing floors and ceilings, and maybe even things like implied volatility skews. And I don't know, maybe like a spread trade or something like that. Maybe just do like once a month write up or something. I kind of like that kind of thinking. So if you are part of the TRI SOF club, and of course all current level 3ers, you guys just sort of got your invite. If you want to pop in, and maybe this weekend, next I guess Tuesday evening, so when we have the club meeting. I do notice that doing it on Tuesdays is probably not the best idea because we do the Tuesday class, and so Zach is pretty burnt out by the end of class. And then I actually fell asleep in front of my computer waiting for the meeting to start. I've done that a couple times too. Super embarrassing. So anyway, any sort of site OGs that are part of the Secret Options Formula Club group, Zugi, if you want to participate, I suppose you're welcome. Anybody who's a current level 3er and exploring options, we should keep a good eye on this. I think they want to make it like a decentralized options exchange for crypto. That would be pretty trippy. They could somehow make this decentralized. And actually, this also reminds me too. Grim was even mentioning it I don't know whether he was mentioning it in class or just in the chat room and stuff, but he's actually pretty excited about trying to get like a decentralized prop firm up and running. So, and actually, even as a document on the site that he's been throwing around, DOA or DAO or whatever. So if somebody wants to wrap their head around that kind of concept and work with Graham and Stewart and see if we can move that forward as well. I do remember Kiran for a long period was very interested in setting up like a TRI prop firm, but I'm not quite sure where his head is these days. So anyway, food for thought. Lots of stuff for this next coming developer cycle for us to chew on. And I suppose the sort of the coup de grace of all of this is we've got this beautiful platform finally up and running. We spent this cycle basically getting this platform up and running, and I have to say, this breadth indicator, it's basically doing the job that I had hoped. I think it definitely could use some refining, and over the coming quarters and years, we will be adding more technical indicators. I would like to add some volatility studies to the DI matrix. Right now, it's studying volume and price indicators, but I'd also like to incorporate some volatility indicators into the DI. But nonetheless, I think on balance, breadth model's doing what I had kind of hoped. It is interesting to see crypto itself, and actually, it's also interesting to see how the sort of the crypto community has actually warmed up to this breadth idea much faster than the classic stock market people that I talk to. But I do believe that the crypto people are quite impressed with the performance of especially the top 30. It'd be interesting. I know Josh was going to keep track of every single signal, and just simply come hell or high water, you just you track. So in this particular case, and this is often why people lose interest in things like algo trading, is you'll notice we got a sell and then a buy and then a sell and then a buy. So that's 4 individual trades you had to do, but you had to be long off of whatever the hell this early March pivot was. And if I'm not mistaken, I think the market's moved up appreciably since then. So anyway, I'll be looking forward to. I haven't heard too much from Josh recently, but I suppose, Josh, if you want to have a meeting in the coming weeks, also Chris, I think, has a couple other things he wanted to throw at you, and then also Julian wants you working on that ebook. So Josh is a busy guy these days, and of course he's putting out awesome tweets. So yeah, we're all firing on 20 cylinders here. That's for sure. So, in fact, actually, probably the best thing to do is speak a little bit to what I'm sort of, I guess, there's 2 ways that I'm looking at the market right now. So on a day-to-day basis, we have a day trading room on the site. So, if you get to the point where, first off, I'd like for all of you to just simply get through the level 1. Well, actually, really, I might even argue just the education program. If you're just coming to, hey, I want to be a passive investor in the market and I want to like position trade and I want to know how to buy against bottom ends of ranges and sell against tops ends of ranges, and I'm not really that active, maybe I'm even a little old lady, risk manager, that kind of stuff, you can leave your education at level 1. And I think that the level 1 program teaches you the process. What is sort of the big picture, strategic vision, money flows, demographics, cycles, all that kind of stuff. What is fundamental analysis? What is technical analysis? What is rational analysis? Also, too, we introduce you in the level 1 program to 2 very simple market state trade setups, the ranging setup, the 3-step, I like to call it the El Tanguinator, but you can, what those 3 steps are: location, indicator, confirmation, market structure, go. And then trend continuation, my fun bot setup, 3 higher lows, 3 lower highs, trading basically AB equals CD harmonic patterns, but in a very sort of butchered way. So I think on balance, that level 1 course, that's fine for a nice introduction overview of what a trader's life is, building a trading plan, the elements of a trading plan, and are you a range trader or are you a trend trader? And I even heard somebody in the level 1 program even today asking Grim, so, well, what is your daily routine? and all that. I really like now that we have the breadth indicators set up, but please understand that these now they're primarily for traders. Probably the best way to use this kind of information is like the swing trader. And actually, Josh, I think you did actually a really good illustration of sort of what a swing trader's life looks like. Where the hell was that? Somewhere around here. Oh, not there. Well, I guess I put it away, but let's see if we can find it here. So a typical swing trader, I think, is actually it's probably I want this one. Let's see. It might take me forever to find this, so just give me a minute. Where is his fun little picture? Jeez, Josh sure is putting out a lot of stuff, eh? That was in here somewhere. Anyway, I did a really good sort of analogy, and especially when the market's trending. Oh man, this becomes really, really easy. When the market's ranging, obviously, these guys. Indicator trading like this in a ranging market, oh, you can just get chopped up. But in a trending market, wow. But this would be a typical swing trader's kind of life. I'm long, I'm short, I'm long, I'm short, I'm long, I'm short. So that's probably the best way, I think, to use the breadth if you're going to trade. But just sort of understand the context of what these signals are. Usually these signals last a couple of weeks. And if anything, what we really want to watch out for is we just want to avoid, like the plague, either buying markets that are both the fast and the slow are heavily overbought, or shorting and selling markets where they're heavily oversold. That's the easiest way for sort of just a nice simple position person to look at this. But this probably primarily works best for like that swing trader kind of thinking. And you can see, I mean, this is the problem with the market. And somebody even asked me to speak to this right now. Is we have to understand the context of what this market, is like. This. I mean, it's just stupidity. So look at that move. This is really, really dangerous up here. Just insanely dangerous. And the problem with this image is that if the Fed goes and fucks around with the money supply kind of issues, maybe they even restrict M2 money growth, you might find that this thing actually contracts, comes down big time, but this doesn't really move. Remember, this is the diluted money supply index. So what I'm worried about is something I've noticed, and as we're sort of building this out, we're going to build these tutorials out. Trust me, this is going to take time to actually get all the screenshots that you need to properly trade this. But hopefully what you guys realize when you load this is, gee whiz, crypto, wasn't crypto just like oversold just like a week or two ago? What the hell's going on here? And if anything, this bothers me immensely, because now when I go on like crypto Twitter, I'm actually hearing people calling for Moon again. And people are actually calling for new all-time highs on Bitcoin again so quickly. And that is not a good sign at all. Not a good sign whatsoever. So, I mean, interestingly enough, on the medium term, crypto violently shifted from pretty darn oversold to now everybody's back in love with crypto again. And that's just too far, too fast. It's a little scary how quickly on the medium term the crypto flipped back bullish. Like everybody's back on the bull side. Now you have to make the argument. We start getting overbought readings here on the medium term. Crypto's probably setting up some sort of top here now. So, man, that surprised me when I saw that this morning. It was like, holy geez, I can't believe how quickly that whip shot. We literally went from, all right, this stuff's all shit to, all right, now everybody's all in love with this stuff again. And, a great tell is when I heard somebody say, oh, yeah, this guy's now saying Bitcoin's going to all-time highs. It's like, come on. Oh, it's not the way bull markets work. If anything, this scares the hell out of me because this is a classic anecdote of a market that, sadly, somebody do some research and look into what's called the Babson break. I don't think we're in this kind of scenario, but the problem is that this is so unprecedented what's gone on here. I mean, historically, what should have happened is this is what our market should have looked like. And you guys should go, well, it looks like we counter trend rallied into a triple top. And so this is a reload zone. And, what a surprise on reload zone tests. If this is a ranging market, how often do markets fail at the top of trading ranges? You should all be able to answer that. So we rallied into reload zone short levels, and we were rejected. Counter trend rally into reload zone. Nice triple top failure, and down we go. Pretty damn cliche. Problem is, with this stupid money supply dilution, that's the price chart that we're looking at. And and a big old injection in volatility here, that's usually the sign of some sort of market in transition, which is scary because you can see how the end of this had to play itself out like a big megaphone, 1, 2, 3, and the end result, right? If you go just really simply, right? 1, 2, 3. Oops. And then 1, 2, 3. So, oh goodness. I mean, this one actually might even have gone like that, right? Actually, this is an interesting one because you could have said, well, Brian, isn't that 1, 2, 3 there? And we should have failed there. And there was one more fuck you. Yeah, that's capitalism. Sucks, but it's just the way it goes. Anyway, what I'm worried about here is now we're going to have another one of these scenarios set itself up here. I don't know what this is going to look like, but could very easily see, notice there's a gap right up top here. I could very easily see them rally right back up top and then back down. The market, and this is the stock market. Keep in mind, crypto's leader. So there's the stock market, right? The S&P 500. You can see on a short-term basis, the S&P is already getting back overbought. Actually, excuse me, that's the Dow. There's the S&P, same sort of thing. It's already getting back overbought. So it almost looks to me like the, what do they call it? The legacy markets. They're about here, and crypto is about a week or two ahead of everybody else. And I've seen that before. Crypto has been, in my eyes, a great leading indicator going forward. This doesn't necessarily say sell. It's just I'm a little concerned that we got so overbought so quickly. I mean, gee whiz, this crypto. That's like 93. It can only go to 100. And the funny thing is I put zeros here, I put tweets out when this was approaching zero. And I was like, these things can only go to zero. Somebody's like, wow, there's some great math, Brian. Thank you. So now we're the exact opposite. And the fact that we've gone so violently, so quickly back into overbought, that tells me that there's no way this is a bottom. It's just no way. This is way too volatile. Another way for you to see this, I think, is probably Sjord's approach. Yeah. Daily stamp charts, absolute mess. But really, we don't even give a care about that. You want to make life really easy on yourself. I've been watching this, over the past couple of years easily. I'd probably even say over the past 4 or 5 years now. It's incredible how time flies so quickly working with everybody here. But the The Bollinger Bands here on this RSI study, they're a great way to sort of tell when a big move is about to come, right? So like here, you can see the bands really contracted. Kind of squeeze. You can see the back and forth and the fight and the bulls winning, and woohoo, up we go. What we've did here, I'm not going to be too concerned about. What I'm more interested in is these bands. You see how those bands really tightened up there? So if we look at the bands right now, you can see that the lower band is contracting quite a bit. The upper band was contracting a bit, but really what I want to get into is I want to see these things really come in. Like this was great in here. But I'd love to see these things come in and contract and then go sideways. You see how we went sideways here. And then I think not so much, but sideways definitely here. And then the resolution. Might be hard to see on just this full screen. But I guess the way I'm looking at this is I'd like to see some more compression in energy before we really get our next big move. Also, too, you guys have heard me talk about the MACD momentum squeezes, and actually you can really see it here, where we kind of broke out through the top, then went violently screaming down the other side. And now, I hate to say it, it looks like there's another squeeze. So we're going to get another big probably break to the upside or downside, then a violent swing the other direction. It's another sort of anecdotal tell that we're building to something. But this is not, in my opinion, this is not, all right, everything's all nice and washed out. We're just bumping along the bottom ends of ranges. Nobody's really interested. Here comes some really beautiful divs and away we go. This is not that type of market at all. And if anything, what I've kind of suggested to people when I've been talking recently is I don't actually even see a W yet here on the corn. Just even if we just look at the price itself, it was pretty important that we go and take out that high there, and we just haven't. And now we're actually getting rejected off of here. Now, this is a really good example that, never one reason alone is enough to justify a top or bottom. We did have a cute little inside bar signal that fired on Friday. I think that was Friday. And the sellers just didn't show up. So what ended up happening was the market actually broke out and the inside bar signal failed and the market pushed higher. That's great. Just means there's no bear just yet. We really would have liked to have seen that level taken out. So we got at least some sort of W market structure working here. And I'm kind of concerned that we just rallied up and now we're just rolling over. And now this could potentially turn into a 3-bar fractal. So if this is the low, beep, then we just go sideways for the rest of the day and then tick through that low tomorrow morning. It's not necessarily that this signal was right or wrong. Clearly, this signal was not respected, but you're only going to get these kind of signals when the market is potentially exhausted. If this was rip roaring bull, this would have been a big honking green candle, and away we go to the moon. But no, it wasn't. It actually created an inside bar failure signal, which in itself is like, what it reminds me, and actually I think this is a good analogy. I went to Europe a few years ago, and I was absolutely shocked at the amount of graffiti all over the walls of Berlin. I mean, everywhere. And it starts at like 10, 20 miles outside the city. You look at all the freeway overpasses, everything. It's all just covered in graffiti. Now, that doesn't necessarily mean in itself that there's problems, but I hope you guys can appreciate it's writing on the walls that, there's enough people that have so much disrespect for society that they're just going and just blemishing it. They don't have any really respect for the law, and they don't really have any respect for their surroundings, and they want to put their own personal stamp on it. Which, I suppose artistic freedom, all that, blah, blah, blah. but it's anecdotal. So you see what's happening in Europe right now and all the infighting and all that. I think the graffiti on the walls is actually a really good sort of tell that, hey, under the surface, there are some deep rooted problems that our society has to deal with. And I just don't think they're getting dealt with, which is scary. Usually, what ends up happening is we have to go through a big period of murder and heartache and destruction. And then after about 5-10 years of that, the humans start going, we're really sick of killing people. We're really sick of murder. Can we please do something else? And people go, hey, I know. Why don't we be peaceful? And usually it's sort of one side wins, and the worst part about all this is there's no sugarcoating. Both sides have just as evil and ugly participants. At the end of the day, remember, two words drive this human species: fear and greed. And the people that are in power, they end up getting more greedy. And then at some point, the masses start going, hey, enough is enough. And then they start getting fearful. And we just go back and forth, greed to fear to greed to fear. And it's just stupid pendulum. Anyway, the point that I guess that I would make with this is I don't actually see a rip-roaring bull market here. I do find it a bit amusing that people are calling for moon when this thing hasn't even broken out yet. What I did see recently here is Ethereum and a lot of the DeFi space. They sure look like they're trying to clean their act up. So if we look at something like Ethereum, we did have a cute little W come in. And you can see there's the end result of the little W. It's not overly impressive. Is this still contained within a larger pattern here? Maybe. If I understand correctly, there's a big fundamental event coming up in June for Ethereum. So I do understand that there is some enthusiasm. Also, too, sort of heard recently, and I get the impression it's coming, whether it happens this year, next year. I actually think it doesn't happen until the next halvening event's out of the way. I've told you guys this before, but I'll just say it again for the record. There's our path, in my humble opinion. So that means, our next halvening's way over here. Actually, I think, here, this is one, right? So halvening's over here. We know where fundamental value is on these things. We know technically where reload zones are. And then if we come back to here, right, we know when the next halvening is roughly. If we follow somewhat the same pattern that we followed now 2 cycles in a row, the pattern looks incredibly similar. And that means we probably bottomed somewhere about a year from whatever the historic peak was. Turns out this peak was in November. So do we bottom maybe sometime November, December 2022? I actually like that idea. That plays well for me. I hate to say it, folks, but I'm the type of person that I actually think there's a big fucking get ready world. You're about to get bitch slapped here come September, October, November. I don't know what it is. It's impossible to predict the future. And what we often say as technicians is we say, well, we can see the price action, the tea leaves and all that are speaking to us. Where's reload zones? Where, what cycle, cycle-wise should happen, all that kind of stuff, decennial cycles, all that. So we see that, but we never know the actual reason why. So I can't tell you what it is. Is it going to be, Mike Hearn rage quits that ultimately puts in the low of the cycle? I don't know. Maybe not. Maybe yes, maybe no. Is it, in this particular case, what was fascinating about this is a guy who was super sort of respected. I don't know whether he's respected or not, but an influencer in this space, we'll call him that, was very, very overtly bearish right in this period here. And really to the point, and he was looking like, hey, I'm the man, I'm the shit, right? And turns out that was actually the bottom. So, I mean, probably the bottom in this market is when, the influencers, when all of the sort of, the people that are in the know actually tell you that the Bitcoin story is over. So go figure. Drive you crazy. What I would just simply say is I've set my watch to this reload zone concept. And actually, we even see this in a lot in altcoins right now, is that they come screaming down and you actually see the damn W's setting up right off that 78.6. I could show you, like, I put out tweets, and I think this is sort of what we are trying to set a base for. There's probably going to be some sort of summer relief rally in this space. But one of my favorites, and it's sort of sentimental more than anything else, good old Digi. I mean, look at these numbers. This is just the peak from September. This isn't even 1 year. And if we just get a 50% retracement of the range since September, this is just the past 6 months, then that produces, if these lows hold, and my hunch is there's probably some fuckery against these lows. But if you could even just risk to that tail low there, that's over a 5-to-1 risk reward, right? And that's basically selling or buying roughly at 2 and looking to sell at 5, or basically, sell half on a double, get yourself a risk-free trade. So that's the kind of trade setup that I think is going to set up here through the summer, or not through the summer. So let's say through the late winter, early spring here. I wouldn't be surprised, though, if there's one more FU against these lows. I'm not ready to commit to, this is the bottom. So when I put tweets out and stuff, I just said, it's about damn time we start breaking these downtrend lines. I mean, that's encouraging. Right? That's one of our sort of bread and butter concepts at TRI is if you're going to trade these things on the bull side, try and wait for the W on the other side of these prevailing trend lines. It usually saves you a lot of heartache. So, and you can see that's basically the same thing that's happening here. So we had a big bump up. There is a W working here. It's sloppy. If anything, you kind of wanted to see this high taken out, so further confirmation. But look at what they've done over the weekend. Big old fat M. Fuck you. Thanks. And now, actually, interesting enough, with that M, we could probably even do like a little foggy boggy. And if we get 2.618 against this trend line in this reload zone, hey, we're starting to talk some sugar. So let's see what we got here. Chaos theory. Hey, there we go. 2.618, 4.669 is right against the lows. So any kind of bottom that comes in down in here, I could live with that. This big tail right here looks very suspicious. There's even a bit of a price gap here that technically hasn't been totally filled in yet. Also looks like there's a little bit of a gap right down in there. So, what I've just been basically telling people is I would actually prefer that maybe we get some sort of stab down into here, and then can I have some sort of, W's that form off here above this trend line? That would be nice. See if we get something along those lines. Anyway, so we'll keep our eyes peeled. And also, this is 4 hours. So believe it or not, I think I'd actually prefer that this form, actually form over here. So I'd actually prefer, believe it or not, that we just sort of bump along here and then start to go over here. Because there is a big celestial event here that I actually think all of this damn war stuff, and I mean, no offense to Mr. Putin, but it makes absolutely no sense whatsoever why he did what he did, unless there was some shit that we just don't know about in the public that was driving him to do that. I don't think it was a poorly executed plan, totally no air support whatsoever. the Russians, if they really wanted to do this right, they should have gone and instantly destroyed Ukraine's air capabilities. And even now, like a month into the campaign, the Ukraine Air Force is still flying their jets. That should not happen. I mean, you want to go back and look and learn how blitzkrieg works, whether the Americans do with their air superiority in Iraq and Afghanistan, just in recent references. More importantly, you look at the way the Germans invaded Poland, the way they invaded France and the Low Countries, and how blitzkrieg actually works. The very first thing you do is you take out the enemy's air support. So clearly, not even open for debate. This military campaign was very ill conceived. Why? I don't know. Is it pure stupidity? I can't imagine it is. I get the impression, I think, that Mr. Putin he underestimated the resolve of the Ukrainians. But anyway, time will tell. Still think it was very, very poorly executed invasion. If I was running the show there, like I ever would, but if I was running the show, I certainly would not have carried out that plan. Somebody needs to lose their job over the way that was executed. Anyway, and hats off to the Ukrainians. They're putting up a hell of a fight. It's kind of sad in a way, though. I will say that what's happened with Syria is, to all intents and purposes, the same of what's going on in Ukraine, and the West kind of turned its back on the Syrians, and wow, did they ever get wiped out by the damn Russian military machine? So I don't know. Is that the fate for the Ukrainians? I sure hope not, but we'll see. Only time will tell. What I will say is the dogs of war, theoretically, if you're a celestial person, supposed to hit their sort of zenith right around April 4th. So I do think that a lot of these risk assets, and interesting enough, you can see stocks really trying to come back here. There's Bitcoin. Does oil start acting like a risk asset again? Or is it going to be one of these crazy political footballs? Who knows? But I do see that, if anything, there was a strong appetite for stocks to come back. And I'm also hearing a lot from people saying that it almost feels like there's, Chak Pak and all those guys. They were having an interesting conversation. And it almost felt like the West was almost too enthusiastic and almost too believing that Russia was put to bed. What I am hearing, and Chak Pak even made reference to that, was, and I actually saw more reference to it today, that it actually is pretty close to them maybe signing some sort of ceasefire agreement here in the short term. So if anything, it would be really good if we could put that war, just get them to put the damn guns down, and try and especially for world food stocks. I guess I don't know whether you guys have noticed. And actually, I even put a tweet out to that effect, because usually when you see prices go parabolic, that's usually the end of the move. So I found it fascinating that just recently people are really, really going on and on and on about what's going to happen to the wheat supply and all that kind of stuff. And I'd actually make the argument that I think that if you get sucked into this argument, this conversation, then you're actually you are, I think, being subject to the media's manipulation. So is this recently what I've heard, and I've heard this repeatedly, almost every single major news outlet, and you notice how they all have the same script, which drives you crazy, right? They're all saying, oh, the input costs for agriculture are going through the roof. Have you seen what ammonia prices are doing? Have you seen what fertilizer prices are doing? And, in that kind of environment, what's the public thinking? FOMO, right? Fear of missing out. Oh, I better go buy some of that. They're all going to get rich, right? I actually think that you're coming into the end of the story here. This is one of the biggest potash suppliers in Canada now. Relatively new to the scene. As you can see, they just came to market in 2018. I think you can clearly see where the bottom was put in. And interesting, if we do foggy boggies off of this whole range, and then we do foggy boggies off of this range, I do find it interesting that there's a bit of a confluence up here. So the sort of natural progression of the chaos theory would say we want to go up to 143. And notice how you can see, at 2.618, there was a bit of a chaotic experience here. Market accepted higher. 4669, again, more chaos. Market accepted higher. So it seems logical. 877 is our next stop, and that's the original 2.618 foggy target up here. But if you come into this story, let's say you bought at 125 and it goes up to 143. That means you made, what, 18 bucks? All right. That works out to about 10, 15% return. But what's a downside risk? I mean, we all know 50% rules, WD Gann. The low here, 35 bucks. The high is $1.30. That's 160. Divided by 2 is 80. Right? 160 divided by 2. I think that's right. So that's basically back down here and probably just a Wyckoff check of this original breakout. Benkoff check, right? So you're coming in on the long side for like 10, 15 bucks, but your downside risk is about $40, $50. Ew, is that the trade that we really want to take? I don't think so. So I would caution you that, the conversation that I'm hearing out of Eastern Europe is, believe it or not, actually what I'm actually reading, which surprised me a little bit, but like I said, I even heard it from Chakpak the other day, is I think actually the propensity for some sort of ceasefire agreement here over the near term is actually extremely high. I mean, it's what I do find interesting about this southern port city of Mariupol in Ukraine is Russia doesn't realize they're probably going to sing songs about this place now in the future. Russia, this will now become a rallying point. People are going to be like, remember Mariupol, never trust a Russian. So what I'm reading more and more that the Russians seem to be a bit more open to peace talks here. And if anything, it's interesting. You guys over on YouTube, you're pointing out, gee whiz, Mr. USA. They're never really a good. I get the impression now the United States of America, most of the world is kind of like, look at you. You just stay over there, okay? You stay over there and don't get involved. And I'm actually hearing that the people that are leading the sort of ceasefire, truce, peace movement kind of idea is Israel, and I can't remember. There's another odd country that you just wouldn't expect that's driving the peace movement. So anyway, fascinating. Israel now is turned into some sort of arbitrator. That's incredible. Anyway, so like what sort of the final, and it's interesting. I actually went and listened to, and if you are interested, right? If you are interested, um, in the agricultural industry and in the grain markets, this is actually what you should be watching, which is incredibly boring. And I mean, they all have comb overs like me, I suppose. I mean, you can definitely tell these are old, gnarly, boring commodity traders. But these are the guys that you should be listening to. Not, and it's remarkable. Like I said, I'm shocked at when you literally listen to the news articles on a daily basis. You literally hear the exact same script over and over and over and over. So and all of you guys, of course, chastise me for getting all uppity about what I hear the major news outlets reporting as "quote unquote" news. Um, But my suggestion to you is, if you really want to know what's going on in the agricultural business, this is probably your best place to look. And what are they talking about? And you can even see on the headline, they are actually talking about what's really driving price here. Is the Ukraine-Russian situation really driving price? I actually don't think so. What's kind of sad is they're making a commentary on, in these videos on the regular importers of Ukrainian grains. And interestingly enough, Julian might find that his cheap Thailand living might actually get quite a bit more expensive, because Thailand in particular, imports 16% of its grains from Ukraine. So yeah, I don't know how wheat works its way into bubble tea. But you might find that bubble tea all of a sudden gets a hell of a lot more expensive over there in the Ukraine. And the interesting thing is that as of September, October 2021, if you actually listen to the grain report and the ending stocks warehouse supplies, they're actually calling for an increase in production from China, an increase in production from Australia, an increase in production from Canada. None of these countries are affected by this Russian Ukraine nonsense. So, what's really driving price here? And, I hate to say it, but what I think is going on is, all these guys made a fortune trading things like, thought I had it on here. Isn't that weird? I guess I must have it on a different screen. Yeah, where'd it go? Anyway, that fertilizer company. Maybe I have it over here. Nope. Over here. No. Anyway, and I think actually they want to take profits, and I think they actually want the public to come in and panic buy their top, which is so sad. I mean, this damn. I gotta tell you, man. I mean, I don't like war, and I don't like murder, and I would definitely say Mr. Putin is a fucking bully. No doubt about it. No doubt whatsoever. The son of a bitch is a bully. We all, if you cannot agree with that statement, then unfortunately, I don't think you and I really can have a conversation. The guy is a bully. So I certainly don't like the fact that people within Russia are getting hurt for saying, "Hey, we don't want to send our boys to their deaths." And from what I understand, a lot of Russian boys have died here over the past month. I mean, I think it's over 10,000 boys. 10,000 boys. Terrible. Could you argue that the United States of America is a bully with especially the way that they acted in the Middle East? Absolutely. So, and unfortunately, it's a really disappointing reality that I see going on in this world is you call somebody out for bad behavior and they say, well, look over there. Can we not agree that Mr. Putin is a bully? I mean, come on. Can we not agree? I think we can agree. So don't say, oh, look over there. Let's agree that Mr. Putin is putting his own Russian citizens in jail, and who knows what the fuck's happening to them in there for disagreeing with his policies. That's a bully. And call it a spade a spade. I mean, I told you, I was very, very disappointed in Mr. Trudeau and how he basically just decided to enact martial law and act like a bully here in Canada because he didn't like what the population was saying. So, I'm not saying one is righter than the other, but let's not go down the road of, hey, this is bad behavior. Oh, look over there. No, let's look at Mr. Putin and say, why the fuck is this guy's a war criminal? As simple as that. I mean, how many people have died in Ukraine basically on his order? So, I don't mean to be rude, but let's not say, look over there. Let's acknowledge reality. Sorry, don't mean to be a dick, but I don't like the look over there answer. All right, back to this bullshit. And of course, half of what I'm saying is just rhetoric. It's just me, blah, blah, blah. Complete waste of time. I don't know what the fuck I'm saying. But anyway, you put me on one of these pulpits and I get a free rein and I just start heading off on a tangent. Sorry, everyone. Okay, back to price action. So, I guess what I'm kind of thinking here is I didn't like how the West sort of decided that they had won this war. I didn't like how all of a sudden, on the first sign of bullishness, crypto Twitter's all like, okay, this is it, man. So I'm a little concerned that maybe people are getting a little too enthusiastic. Something like my fun little digi, I think I'll use this as a good proxy within this space. If this thing is really a bull, then what we want to see is we want to see this thing come back down into reload zones, put in bottoms, and turn back up. So I don't know what this is going to look like. Nobody does. I can't predict the future. But the fact that, for heaven's sakes, please don't chase. This is not a chasing kind of market. And what I'm really worried about is, like I said, so many people got so bullish so quickly. I'm actually worried that there's a big FU coming. And we might find that Mr. Bully over there says, you know what? All these guys that I threw into Ukraine, they were all the conscripts. They were the shitty soldiers. They really weren't that great. Let's send in like 100, 200,000 serious regulars, and let's just go mop the place up. He could do that very, very easily. Why he hasn't done that, actually, I'm a little surprised. Like I said, I think personally he just underestimated the Ukrainian response. I think he thought that this was just going to be a cakewalk. So anyway, it is what it is. Just be forewarned. I don't like the smell of this. This just doesn't smell right. Call me crazy. Suppose, just a couple little internals. If this really is a bull market, then I think we should have seen the Bitcoin dominance here top out in earnest. This will be a fun study to get someone like Colin, who is actually the one that really, about a year or so ago, he really, I'm not going to say fell in love, but he really, really sharpened up his trading watching this, and he has a cool video. I think he still does his videos. I don't know. I know he had a kid recently. But this is the Bitcoin dominance. And it is interesting to see how we had this sloppy bottom. But in essence, from this sort of sloppy W bottom, basically the altcoins have just not really done a hell of a lot here, right? It's just been kind of poop central. So Are we topping out here? There is an M. You know, we always say, I guess in this case, seeing an M in the Bitcoin dominance would actually, I think, be bullish of altcoins. I had said the other day, and I'm actually hearing a lot more talk for whatever it's worth, right? Ethereum put in its bottom there the other day. They're talking about it moving from POW to POS. I did hear some ramblings last week about the NFT space, and I noticed a lot of the little piece of shit NFT stocks were all ratcheting higher. Also did see a pretty big jump up in Chinese equities. And actually, it's kind of a fun project, probably a little bit beyond the regular site membership. But for the level 3ers, I actually shared with the level 3ers this really interesting, you can see, I think I have that saved in. Yeah. There's something going on in China internally. Now, I've said this to you 100 times before, so don't be surprised if you hear this. There's no way in fucking hell I'm going to ever go and invest my money in China. It's just not going to happen. But, you know, are there US ADRs that maybe I might take a look at? Are there companies that might be able to, you know, they are US based and they might be able to participate? Maybe. I don't like the look, and I certainly don't like investing in totalitarian dictatorships. But, you know, if China does go into bull mode, I think it drags the whole Western market higher as well. But it is interesting to see this write-up I shared with the level 3ers who've basically just gone through their options introduction. I think all you level 3ers is probably a good idea to take a look at what the hell's going on, both on the downside and on the upside. Intense volatility injection into the Chinese market. The only thing I would say to that, though, is just be careful about getting too bullish too quickly, because most of these markets, like if we look at things like, well, actually, even Taiwan Semi is a good example, but you can see how this thing clearly failed. You know, this is the bump up that we're talking about. Is that a dead cat bounce? Is that a rally in the face of a bear market? I don't know whether I would touch this now, but I guess what I'm worried about is we had this huge gap higher here past couple of days. I mean, lots of volatility to the downside and then huge volatility to the upside. So if we look at like BABA, for example, big gap. Now, you know, how long have you guys been working with me? Everybody should be able to answer this. What's the probability that this gap is going to be filled in? Right? And the market has to trade back down to 76.74. Is the probability low? Is the probability high? I don't know. I think we all know what the answer is. It's a pretty big number. Is this thing ready to stop going down and start going up? I don't know whether I'd really call that a bottom. But what I could very easily see, and actually it looks very much like this bottom, is I could see some back and forth, choppy chop, and even sort of here. Like this is what I actually think is going on. You're going to gap higher, then you're going to come all the way back down and fill in the gaps. Or maybe like this, you see how we gap higher, rally, and have to come all the way back down and fill in the gap and then put in a real bottom. So something's going on over here. Now, remember, our thesis for 2023 is our ultimate bottom somewhere in this area here. And that's the decennial report. I'm going to stick with that because I think that that's accurate. So, God, who knows how long ago that was. Oh, there it is. So this was from Larry Williams back at the beginning of the year. It's usually a pretty good roadmap as to what to expect. And I think we're sort of like right about here right now. So we had the big jump up. A lot of stocks gapped higher. We could chop our way another month or so up. And then I think we have to roll over and come back down. We're probably going to take out these lows, put in the ultimate bottom about mid-year, and then work our way back up. Hey, take it easy, Edward. So I'm not overly convinced that this bottom is in just yet. And then, of course, looking at things like this, that's not a sustainable bottom. And if anything, if you're a good technician, you kind of want to go, don't rally too far here, right? If anything, probably a really good example is if we go there to there, and all you level oneers just learned this, 38.2s. You can tell this is a really good example. Dead cat bounce into 38.2. Now we have to ask, is this thing actually still a bull or is it a bear? Or actually, is it still a bear or is it actually really a bull? M top, failure at 38.2, back down against the bottom end of range, consolidate, lose the lows, I'm still a bear. So I actually think we're probably going to go through exactly the same thing we just saw. I'm a little concerned about people just getting a little too bullish, a little too quickly. So even if we go there, and I don't know where you want to measure. Do we use that same high? Maybe we'll use this counter trend rally high. If that's the case, we've gone beyond 38.2, which is a little bit scary. Yeah, we just blasted through there. So if anything, that's a good sign because it means, okay, we're not just, continually rolling over at 38.2s. If anything, maybe what I would be expecting is something along this line. We're going to find out whether this really is still a bear or whether we can turn back up and this turns into an inverted head and shoulders. So, and actually this is a lot like the Digi chart. So we've dead cat bounced off of the bottom. I think the Digi chart looks way better. But we've dead cat bounced off the bottom. If anything, you might even say, well, Brian, doesn't this look like AB equals CD? So there to there. And there to there. Which takes us back up to, that would take us up into neckline area. In fact, actually, that even makes more sense because what that would be is there and there. So then that would be sort of a replication of there. Then one more up. And then pull back to the shoulder. So I kind of like that. But in essence, that's where I think we are right now. There is some sort of dead cat bounce scenario going on here. I think it probably has more to do with the Chinese have just literally recently said they're going to war on this latest COVID variant, and they shut everything down. And maybe this is sort of a reaction that, okay, if they shut everything down, maybe online purchases, maybe they all come storming back. Now, this in itself is a good anecdote of capitalism. The irony of it all is the capitalists, they don't give a fuck. But morally, can you justify investing in a company like this anymore? I don't think I could. So there's no way I could invest in this, but it is an interesting anecdote on a Chinese stock. God, this silly world. I can't believe how quickly everything is, all of this sort of peace movement and human rights and all that just can get wiped out so quickly. So even if this thing was a screaming technical buy, it's kind of funny. Guy like Charlie Munger, he's a huge investor in this company. Charlie Munger, is he a wealthy individual? I think so. Does he have any ethics at all? I don't think so. So there you go. And I suppose at 90, 95 years old, he's on his way out. He couldn't give a fuck about ethics. He's going to go and stand in front of his maker pretty soon. So he might as well enjoy everything that he can now. All right, anyway, that's a silly comment. Okay. So a little bit of rhetoric there. I guess about quite a bit of rhetoric. An hour and a half. I don't know whether I've given you any sort of guide. Hopefully, what you've heard out of me here is let's not put the cart before the horse. Trade your setups. And I mean, if you bought this W and you're like, Brian, I bought this W and I want, hell, I'm willing to take a shot against these lows in here and I'll sell half on a 2-to-1. So then that way I get myself a nice risk-free trade, or maybe you sell you 3/4 at 0.5-to-1. Who knows? I don't care. 2-to-1 would be basically a test of this yellow line up here. Trades are just working away. In fact, I wouldn't even have a problem if you followed this and this was your plan. And you said, Brian, I couldn't give a fuck about your opinion. Your opinion doesn't mean anything to me. I just trade setups. When the W's come in and we have things like bull divs and we're in a half decent trade location, I just buy them. And put your stupid rhetoric away. I don't care about what you think about, totalitarian dictators. I don't care what you think about Mr. Vitalik and him becoming a rock star. All I care about is trading my setups and making money from trading. I would respect that. I would totally respect that. So, it is what it is. But at the same time, too, if anything, just be patient. I would even say if you wanted to join this trade, maybe just throw on a reload zone here and work a stink bid, down against the bottom end of this range. It's not a terrible idea. Having said that, if you're asking my opinion is we're in Chop Vegas and we haven't really even broken out on things like the Bitcoin. And I don't want to, and I'm not going to, I don't want to believe anything in the market until we get beyond this. And actually it is April 4th. I think it's April 4th is where I think, and actually, speaking of Mr. Putin and Russia and all that, I think actually this whole thing hit some sort of apex here. And you might actually find that the peace settlement is actually done here and everybody puts down their guns and they go back to rebuilding. And how ironic. This is going to totally support the banksters because the banks, now what I've heard is the U.S. politicians now are saying that we need to create a Marshall Plan for Ukraine. So every dollar of damage that is done in Ukraine, we need to today commit to spending $5 in reconstruction efforts. So this is exactly what the banksters want. And the banksters go, we'll lend you the money. Sure, no problem. Boom, instant slavery. And you start the whole fucking cycle all over again. Drives you crazy. Stupid humans. All right. Pick and choose your cryptos. The broader crypto market, I think I've spoken a lot about that. I think, Bitcoin hasn't broken out yet. Ethereum did break out. There are some great stories within the Bitcoin or the crypto space. So, something like this loop ring, I have no idea what the story is there, but you could just see that somebody does not want this thing to go back down to new lows here. Yeah, it might. I mean, how you actually approach this. Do you just nanny nibble your way in and you're going to say, screw it, maybe I'll even risk all the way down here, but we're down at the bottom end of the range. I'm more than happy to go in and just buy this. And hopefully everybody can see this big wide W here. So can I come in and justify taking a shot down in this area? I think so. Is it realistic? Sometime over the next, say, 6 to 8 months, we get some sort of counter trend rally back up into this. And this is just nothing more than just dead cat bounce, from 80 cents. And actually that is a double bottom level. I might wait for a W to actually come in here, but nonetheless, 70, 80 cents here, $1.60. There's your double level. And $2.50. Hell, there's $3 up there. You might even get 2 doubles off on this thing. So, if anything, what I just want to try and drive home to all of you is who's selling this market here? I don't think the institutional players are selling down here. I think, the public is going to be conned into panicking and dumping and getting out. And the smart money is probably accumulating through here. And I see a lot of cryptocurrencies look like this right now. I don't know whether I'd put a time horizon on how long the double takes to happen, but my hunch is if you start accumulating through here, just the normal seasonal rally, you'll probably make some half decent money on names like this. Trade your setups. You want to wait. Obviously, we have location. You want to wait for divergence. You want to wait for W's. That's fine. You're like, well, Brian, I just put myself on an anti-nibble program, and anytime we're at or below 78.6, I just buy a 0.5% once a month. That way, over 3 months, I've got about a good 2, 3, 4% of my portfolio locked in. There's nothing wrong with that. In fact, actually, I even did that one on a Danny name. I always love to ask the community, has Danny gotten out of the penalty box yet? I think I heard from Nick on Wednesday that Danny has gotten out of the penalty box, so that's good. But this was a name that he was interested when he was a superstar, rock star in this space, and everybody thought he walked on water. And I said, all right, well, if he likes it, I'll go in and I'll start working bids. And I bought a little bit here, and I bought a little bit here, and I bought a little bit here. So now my average is right around the 78.6. And I've told you this before. What's fascinating in this one case, looks like the W is coming in a little bit lower. But gee whiz, look at that W, eh? And the W's come out on massive volume breakout. So love that. But that to me totally looks like a viable name. All of you guys are sitting there going, man, that Beamish guy, all he does is talk rhetoric and spitting out his opinion about politics and stuff. When's he actually going to give me something that's worth to take a serious look at? Well, there you go. Merry Christmas. That, in my opinion, is something to take a serious look at. Whether you want to dollar cost average your way in, any nibbles kind of idea, or you just want to wait for these market structure bottoms, man, volume speaks volumes. Somebody put some serious money to work there. I don't have a problem joining that person, but as I told you, I'm already in. So, but fascinating. Could there still be one more FU against this? It wouldn't surprise me, folks. Trust me, it wouldn't surprise me. But, all this kind of stuff that we look for, there's your primary trend line that was confirmed here. Can I get a W on the other side of it? We had a sloppy W. This is, sometimes people don't like trading these because if you change this to a line chart, notice the W, well, it disappeared. You can see they tried to put a little W, quick little M. No, not quite ready. But that's a pretty wide looking W now. That's not bad. Not bad at all. And if anything, my question for the community, anybody who wants to look into it, why did that happen? So clearly somebody's come here and put some serious money to work. That's great to see. Bottom end of the range, W's. Do we have any momentum divergences? I suppose you could argue, well, it's not really. Oh, yeah, actually you could. So you could even argue there's a volume divergence. Bulls were stepping up, getting more active. You can see the volume impetus signal right here. So higher highs in bullish volume, but lower lows in price. In fact, actually, even the bears were falling asleep here. Bears kind of woke up a bit here, but instantly the bulls just took right over. And of course, there's the end result. Boom. I suppose if we look at things like RSI, just nice simple momentum indicator. Yeah, lower lows in price, higher lows in RSI, always a good sign. Nice bull div. Yeah, okay. Anyway, so there's an idea for you to chew on. That actually looks quite viable right there, my friends. So, as I said earlier, I'm already long, so I don't need to buy any more. Somebody wanted us to take a look at Filecoin. Looks like it's on a lot of exchanges. I heard, oh, by the way, that if you're a Canadian, be very careful about trading on FTX. Colin reported that the Ontario Securities Commission are about to kill Canada, and Ontario sort of is the biggest province in my country, Canada. So as a result, a lot of the smaller provinces just follow suit. So they were threatening to shit on Binance. Binance did something that made them happy. So Ontario Securities Commission pulled back its threat to outlaw Binance, but they did not do that on FTX. So Colin was telling us that I think it's like as of noon today, if you're Canadian and the Ontario Securities Commission, my hunch is all the other provinces are just going to follow suit. They took a poop on FTX today. So be forewarned. So I do notice this FTX here. Be careful there. So looking at KuCoin, I don't know. There's a market for you. You see, you don't have that big volume spike that we saw on that Cello. So if you had that volume spike like we saw on Cello, I'd probably be like, ooh. Is this a good trade location? I mean, you're coming in at the bottom end of the range, so it's not bad in that regard. I don't know whether I actually have a bottom here yet. Oh, excuse me. You can see the bulls were active here, ramping up. You can see they actually put in a doji here, which is in itself not really overly bullish. It's kind of like an indecision bar. And then, of course, we fractaled out right there. So bears took over as of this point. Boom, down we go. On pretty light volume, though, so that's kind of good. Bulls tried to stage a recovery rally, kind of fizzled out. Bears sort of went, "Rawr, look at us. We're still alive and awake. Here we are. Rawr." Then everybody backed off again as the price just drifted lower. Interesting, we went down and tested this low. It looks to me like down in here, you can probably even just put a horizontal line. Down in here, there's definitely some interest. You can see that they actually went through this low, so there's probably a bunch of liquidity on that event right through there. And then this looks like an inverted head and shoulders kind of idea. So a lot of battles going on here. Not a big surprise. We come back down into these levels, and whoever was interested in buying down in here, they were active again. And you can see that the sellers, they kind of losing momentum, right? They push down. Sort of the same thing here. Yes, this was a green candle. Yes, this was green, and it showed, wow, look how strong I am. But it was a doji. So same sort of thing here. Big red candle down, but, doji indecision sort of bar, although, of course, huge tail here, maybe almost like a hammer. And lower than this selling bar. So clearly the bears are kind of losing their oomph. And since we have this bar here, that bar there, that bar there, if we get a red bar lower than this one right here, then that means the bears actually have fallen asleep here. So keep your eyes peeled for that. That would be a bar less than 70,824. See the bulls, right? Look at me. I'm awake. I'm a bull. Broke these highs. So that busted any top that was forming here. But then that was it. No more. Then bears take over again. But notice bears, this would be interesting. So that's 176, 183. All right. So the bears broke this high, but they couldn't get through this 200,000. So again, we do a bar lower than this low here. It means the bear's falling asleep. We got down to 92. Remember that number 70. And look at this. 64. Uh-oh. So if you're a bear, we're actually getting this signal right here that the bears are losing interest. Just sellers just don't want to sell. So really at this point, kind of the same thing here. We had potential top, but that was broken. But these highs are lower than this high. So we got one high, two highs. We get a third high, which this sort of is. If we get a bar lower than these bars, that means the bull that's fallen asleep. And notice, so you see, instantly the bear fell asleep and the bull fell asleep the very next day. Everybody has just completely fallen asleep here. So really the question on something like this, in my eyes, is who the hell's driving the bus here? Who's in control? Is anybody in control? Is this market just drifting? We did break this support low. And we broke that support low. So technically this is a big bearish market structure here. A little bit of a railroad tracks, but again, just on absolutely abysmal volume. In fact, actually volume went to another new low here. This is 55,000. That's even lower than this volume low. So where the hell are the bulls? And the bulls could have come and smashed this top and said, no, we're still awake. We're still awake. If yesterday they had come and done more than this bar, right? That was 145. And yesterday they did 113. So still, there's nobody in control of this market. It is just totally drifting here. Very dangerous to be going and picking bottoms in a market that's just drifting. Now, I think probably the reason why the bears have fallen asleep is because if you, let's say you're long a million bazillion of these things. The damn thing was $200 a thing. So a million bazillion times 200, you're a 200 million bazillionaire. Oh man, look at me, I'm rich. Here, this is only 17 bucks. This is, Simon Dixon says, go back and load up when the asset has fallen 70 to 80% of its previous rally peak. This is like fallen like 90, 95%, if not all. Actually, this is a really good analogy that it turns out that the floor is really the first day's candle. How painful is that, eh? So there's the bottom end of your range. What is that? Zero. Oh, $10. Oh, Jesus. So I don't know, man. I don't think this thing's bottomed until you see that $10 mark. But it's putting up a hell of a fight here, right? So what do we have? We have a low of $16 and then a new clothesline low of $16.80. We know that the floor, somewhat speaking, is really around that $10. So even at $17, it's about 60, 70% risk. So be forewarned, just even coming in and buying here, you could easily see this thing fall $7 and it would just be flirting with that low. So no sign from volume that we've hit a bottom. Are you in an acceptable trade location? I think so. You're definitely at the bottom end of range. Could we start to see bullish momentum divergences form here? I bet so. It wouldn't surprise me. So there is this big honking ugly one way over here, but I think that played itself out. So if anything, you probably want to see a new one. The fact that we went to new lows here, especially on a clothesline basis, I think you can start seeing some clothesline divergences. These lows are higher than these lows. That higher is lower than that high, or that low. Not a hell of a lot to get excited about, though. I got to be honest with you. I mean, for these kind of things, what I love to see is I want to see a saucer bottom. Might take something like that to have happen. It's going to take, I remember I showed you that loop ring earlier. So there is a market that's in the process of bottoming. And maybe it even looks something along the lines like that low and that high are probably the lip of the saucer bottom. And there is your low. If that is the low, then actually what I'd like to see is this thing rally back up to the neckline. And that's probably like a 38.2 off of some range. This all go into divergence because that low is going to be, especially on a clothesline basis, it's going to be lower than those lows. So you get that, and then you get that. This might even be like a double divergence because that's definitely a div there. Willie did get stupid, bottom in RSI, so not a bad little pivot down in there. So really, you'd love to see this hold. If anything, what you'd really love to see is, can I have a nice little W come in down here and all this stuff start turning back up? Then, on the confirmation that this thing is no longer a bear, this pullback right here, and if you can do things like reload zones, right, notice there's 61.8 to 78.6. So this bottom would be sort of like somewhere in here, which I think that makes sense. I mean, you're definitely coming into the bottom end of range. That would be anywhere around, I guess, about $20, which would be a 90% discount just off of these highs here, right? Yeah, about 90%. So that's sort of, you asked me, well, Brian, what about Filecoin? That's my 2 cents. It's really, I don't see anything that makes me go, oh my God, this thing's a screaming buy. Like I said, I actually think just looking at this thing's drifting right now, and it's waiting for somebody to give it permission to actually bottom. Some fat cat, Chack Pack, or whoever the fuck it is, somebody's got to come in here and say, you know what? I like this idea so much, I'm going to step in and put a floor in here. Is this the main? It might be the makings of it, but based on volume, I don't think so. And I don't see anything momentum-wise to get me too excited. So, is it cheap? Yeah. I think that's probably the best way to describe it. All right. Yeah, I like it from if you want to dollar cost average your way into a name and you're buying the bottom end of range, okay. I can show you a ton of these kind of names. That's also, and what we should probably back up to is say something like, does this look like the same on other exchanges? Where is another exchange that you might trade this? OKX. Does anybody still trade on OKX? Kraken. Trex. That should be interesting. Let's see what it looks like on Trex. Yeah. It's bumping along the bottom end of range. Interesting on Trex. There is a bit of volume. Look at this buying interest down here. So that's better. But you can see, Mr. Bear. Better. I don't know whether you can really trust Trex, though, to be honest with you. Yeah, I think at absolute best, I'd say like Nanny Nibbles. And if you want to Coinbase, I think that's the best one to go. And if you want to start dollar cost averaging, oh, there we are. Look at all these. Is Phil in? Is that what the symbol is? Phil? I thought I went file. The same thing? Somebody help me? Is Phil the same thing? FIL? Because there it is on Binance, right? All you guys love to trade on Binance. Yeah, I'm going to say the same thing. It's at the bottom end of its range. It would be curious. I guess a question I would have here is, number one, is this POS or POW? And how many coins are out? Yeah, okay. So there's Andre sort of saying that kind of, I mean, I'd be curious to see like what is the value of one of these coins. Looks like we got a bull div that came in over here. It just briefly came in, but I don't see any W's here. So I'm a bit surprised. I would say that that's like a pound the table buy. I don't think I would say that. But if you want to put yourself on a dollar cost averaging program and just be nibbling away, maybe like once a month, once every couple months kind of idea, just accumulating like 0.5% or something. That's not a terrible idea. And I can appreciate that the bears are falling asleep because, man, we are a million miles away from the old highs. So that would be my response. I'm not quite sure if I would have an outright buy on this, but accumulatable, yeah, I could buy that argument. Give me a W though, eh? Just give me a nice W. Where are the W's? Somebody says OMG has a nice W working. Yeah, that's better. Show me that kind of shit. So who asked that question? Bradley Norris. Do you see how that looks a hell of a lot different than that last one that we talked about, file? I mean, look at these volume pattern even too. I love to see the higher highs in volume. Can you see that impetus signal? And more green chunky bars, and look how the indicator is W'd out and it's heading higher. Like, I like that. That's what I like to see. So if anything on something like this, I don't even know whether I really want you to even go and buy that. I would say, okay, well, let's draw our reload zones so you can see where we're supposed to buy. And might even like drill down to a 4-hour, kind of like what I showed you with Digi. Something like that. And then you just go into stalking mode. And you say, you know, if I can get the price to come down into this area, start to show me this kind of action. Look at this beautiful div here. Right there to there. And then there to there. No div there, no div there. So it's just there. Really, to me, this looks like a head and shoulders. Sloppy. I'm not going to say it's pretty, but nonetheless. So, you know, market comes down into reload zones after confirming W's, puts in the head and shoulders. Could you have gone and bought in reload zones? Look like a boss. You know, wicks and tails like to be eaten. Look at that tail down in there. W right off a mountain man level. And that creates a inverted head and shoulders buy signal here, which is probably 50% of the range. And then, you know, on the head and shoulders breakout, confirmed by volume 2. Beautiful volume impetus signal. Look at these rising volume bars. Can you see the difference between this chart and that fill? They're kind of apples and oranges. You know, you had the volume coming in here, but notice this push higher here. Where the hell did the buyers go? They just didn't show up. Probably what I would say on this one is, you know, maybe we have that head and shoulders. I don't know. Maybe the neckline, something like this. Actually, we need to still work our way up into here, then pull back, then go. So I just don't see this on this one. That looks very, very different. So anyway, so you're asking, like, this is one where I could definitely be like, you know what, I want to get in there and start accumulating. Then you ask yourself, is there any room for this thing to move up? So in a weird sort of way, I kind of think that file coin is kind of like right maybe here and sort of same similar kind of thing, or maybe even here. I don't know. But this one has actually broken out here. And it's actually, you know, our level 2 instructor, he does this is a great job because most of the time, what's ending up happening in the marketplace is it's giving you information. Whether you trade it or not, I hope you can all appreciate This is some pretty damn powerful information. What did Brian say? If you ever see the market smiling at you, what should you be thinking? That's information right there. Does that make sense? Wow, we don't really have many people here today. Interesting. What do you think, you hangouters? Actually, what time is it? I got to get off my ass here. Anyway, so I have given you a few ideas to chew on, right? We have looked at a few altcoins here this morning. So I don't think you can say that it was just all bullshit and Brian's just ranting about fucking Russia and all that nonsense. I have given you a few things to think about here today, chart-wise. And this one, actually, this is a really good one because it does have market structure, again, like what I'm saying with Kiran, we're actually getting market information here. This is really important. Like, just respect the market information. Doesn't necessarily mean you're taking a trade or not, but somebody has stopped the bear slide and trying to put in a bottom here. And of course, if you're really slick, you're like, okay, well, there's a W. In fact, my trade, Brian, was that pullback and Mountain Man level. That was my trade level. And wicks and tails like to be eaten. Again, information. There's a bunch of trap bears here, so they want to get out. What a surprise. The price comes down into that area. They go and buy. In comes the bottom, and up we go for our next leg higher. Again, information we're getting. Right now, the bull is driving this bus. That's information. So it doesn't necessarily mean it's going up, but the market's trying to speak to us. What I would say is as long as we get a W on the other side of this trend line here, this thing's pointing higher. What gets scary here, and we'll watch, we'll see. A lot of times I'll throw stink bids in, and these sons of bitches just go screaming down. Your stink bid gets filled, and then the goddamn thing goes and puts an M below this trend line, and that is actually an outright sell signal. So we don't want to see that. But the point of the matter here is to get this sort of train going. Then remember, April 4th, that's when Brian really thinks this stuff's going to pivot. So could we have just choppy and this just an absolute mess as we go through this? Abso-freaking-lutely. I mean, this is just an ideal, perfect scenario. Well, actually, I don't want that to happen because I'm bullish. But ideal, perfect scenario world would be, something like this, right? And away we go on the other side of April 4th. So I think I showed you, like, I'm interested in that Digi, and it's basically the same chart. It's identical, and you can see the correction is already underway. I don't know what this looks like. I'd actually prefer this to take a little bit more time to develop. So, okay. The only other thing that I'm going to mention, which basically is the exact same thing that I've been talking about here all day, is on the corn itself. I actually think there's this pattern going on. And this is what's called a bow tie. And usually you get these events, they're sort of midpoint pivots. You can see how price got really, really tight in here. So I get the feeling that there's the midpoint of your bow tie right in there. And then you get these flare outs both sides. So we've got a big rally up, which basically corresponds to that move there. So you can see that if I did just a pure market symmetry study, that's what this is. Just literally all I did was just take this price action. Right? It's literally exactly that price action. Copy it and then flip it around. And if the world is a fractal, if we're all big heads and shoulders and that kind of stuff, then price action should follow along. So I just take that same line off of that low. And you can see it suggested that we were going to rally up here, but it now suggests that we need a period of pullback down into the bow tie and probably right along the bottom line of this bow tie. Then a rally back up top, then a crash back down. And then I think actually we ultimately see our move again after April 4th. So like I started off the conversation with that whole kind of thinking that the West, I felt like this rally here, and if you look at the stock market, same sort of thing. Just feels like everybody in the West has said, okay, the Ukrainian thing's over and now back to business. And my hunch is it's not quite over, folks. And you never know. I mean, it might be maybe the Chinese take a run at fucking Taiwan. Who knows? Maybe it might be that the Japanese say, you know what? This is our opportunity to take those Russian islands back from the Russians who stole it from us at the end of the Second World War. I actually like that thinking. It's something that Vladdy did not expect whatsoever. And I could very easily see the Japanese, kind of like the Germans, you can slowly see they're being dragged out of their shells, and they're now going to become participants in the insanity again. So one thing that I don't think a lot of people are expecting is the rise of the Japanese empire again. Everybody's forgotten about Japan, so we'll see what happens there. Anyway, okay, I don't think there were many questions. Oh, look at that. Oh, you guys actually asked a few questions. All right, well, I guess I better get off my ass. Here we go. Number one, hello, Brian. Until I have the skills to apply what I learned with TRI level 1 to make my child savings grow, I'd like to have a passive management account for my child. From a European point of view, for the next fear-greed cycle, does a lazy, diversified approach of going some percentage to equities like VT, ETF, and some other percentage to bond ETF next year's rising interest rate, I understand it correctly, make sense, or can I do better? You know, there's a couple, especially if you're saving for your kids. I mean, let's not screw around with this shit. There's a couple mutual funds that do automatic rebalancing. And so as time goes by, they automatically rebalance your portfolios. You just like AGF, for example, they have one. I think Franklin Templeton Group has another. I'm sure there's probably those over in Europe. But, God, I can't remember the name of them now. One of the major traps that people usually run into is, let's say the stock market's doing really well, and they just keep piling more and more and more money into the stock market. And we all know, like if we just take a chart, let's do a new one here. We'll go SPY, and we'll go 1 day. Get rid of volume. And where's the compare button? What happened to the compare button? Oh, that's weird. Oh, compare here. Okay. TLT. What I would suggest you do is, and this is just really, really simple, but oops. Yeah. Let's go weekly. All right. So in this case, and you can clearly see, really good example here and here. The problem, you know, with most people, the way that they invest is you notice like the blue line. We won't talk about bond market right now. We'll just talk about stock market. So most people, they invest and they get more excited about the stock market as a, kind of like what you see happening with the ag market right now. And I showed you that ag that potash company, how it's just gone straight up, and it's actually coming into profit objectives now. But all of a sudden, mysteriously, now all that shit is the best thing to invest in because, oh my God, the world's running out of potash. So what ends up happening is as the damn stock market moves higher and higher and higher and higher, what people end up doing is they end up taking their money out of bonds and buying more stocks because they see that the bond market is going, and in this particular case it didn't, but if we just use this small window, they go, well, my bonds aren't doing anything, so man, I'm going to sell my bonds and I'm going to buy stock. But as you can see, if I sold bonds and bought stock here, wow, was that ever the wrong decision? And there are some mutual funds that will automatically rebalance. Like you say to them, all right, I want, say, 60% stock, and I want 40% bonds. So you're nice and diversified. And as the market's moving up here, blue line, as it's moving up, and let's say you set up the 60-40 split here, but as the blue line's moving higher, and you see that the orange line is actually almost exactly the same as it was when you invested, the tilting of your portfolio, maybe at this point, just because of market forces, now maybe you're at 70% stock and 30% bonds. So you can buy managed mutual funds that will go in on a quarterly basis, and they will say, okay, we got to sell 10% of this to get the client back to his original desired 60-40 split, and we're going to buy 10% of this. Whoops. So it goes up to 40, but we're going to buy 10%. So this is what they call automatically adjusting funds. So in this particular case, market goes up, and then all of a sudden the stock market collapses, and the bonds go shooting higher. Well, maybe at this point now, let's go say, we'll do our dotted line here. Now, because we, theoretically you had a 60-40 split, but because the stock market collapsed, maybe now you're at like 50% stock and 50% fixed income. So in this case, since your original request was 60-40, now you got to go and buy 10% stock, and you have to sell 10% of your bonds, right? At this point here to get back to your 60-40 split. Right. And it just keeps going back and forth, but this is called auto adjusting. And, there is actually a very specific name for these funds, but your question specifically was, I want a passive, low risk, want to have my money working, saving for my kids', future. And I don't want to take the chance of potentially like coming in and buying the top of the stock market. I'm going to go 100% SPY because look how fucking strong the stock market is. And then all of a sudden you get wiped out. So I actually really like the idea of these, and they're called like auto balancing. And of course they, so there you see they have balanced funds here. If you want, we can talk a little bit more about this in the daily brief kind of idea. But that would actually be my suggestion for you is you go, you plunk their money into this. You say, I want that 60-40 split. So I am more heavily into equity. I wouldn't go anything more than 60-40, especially with how dangerous how they bid the stock market up. Like right now, does it not look like this kind of scenario is developing here, folks? Can you kind of see how equity is maybe a little bit ahead of itself and how the bond market is maybe a little discounted? Does it not feel as though maybe we're going to have to go through a period where bond prices actually rise? Let's get rid of these. So, I mean, like here, this period here, bond investors would be like, oh, we're getting killed, but look at the stocks, they're all getting rich. Oh, what the fuck? And then all of a sudden, boom, boom, instant correction. That's what this feels like to me, folks. Is look at this stock market. It's gone like straight up. And the bond market has done nothing. So what do you think the odds are right now that people are going, man, I'm sick of owning bonds. These bonds suck. I'm going to sell and I'm going to go load up on stock. Because fucking A, Tesla just put in a weekly upside key reversal. I feel like that's what's happening in this market. People are way too heavily long stock. And I feel like one of these things is about to happen here. So the problem is actually I don't think that this happens until the fall. So I think your Teslas and stuff, we saw those Chinese stocks rallying up. The Canadian stock market still looks pretty strong. And with crude commodity prices as strong as they are, I think that market stays up. But I got a nasty feeling that there's going to be a big correction that sort of, and if you have those auto adjusting mutual funds, they do really, really good at capturing this. Because if you're just watching from the sidelines, you won't be able to make this decision. It'll drive you crazy. The auto adjusting funds, and like I said, I can't remember the exact term. It's been 10, 15 years since I've been in this business. Jesus, longer than that now, like 15, 20 years. But there is, if I was going to give a suggestion as to sort of how to passively manage your money, I would actually go to these mutual fund companies and I would say, can you set up this auto adjusting fund? I want the 60-40 split. And the mutual fund company itself will auto rebalancing. That's what they call it, auto rebalancing. That's what I would recommend that you do. Now, whether you do that or not, that's up to you. Trying to time it on your own and getting it right all the time. This is where Stewart, he always says, if you pay peanuts, you get monkeys. And sometimes in this life, I actually think it pays to pay that MER to AGF to have them manage this for you, and then you don't take the chance of fucking this up, especially if you're talking about like hundreds of thousands of dollars. You might want to save 5 G's on commissions, but it ends up costing you 20, 30, 40, 50 G's down the road. All right, so that's my answer for you. Sure hope you like that. From a European's point of view, for the next fear greed cycle, does a lazy diversified approach going some percentage to equities? Yeah, okay. So, I mean, in essence, I think you should always have this efficient frontier thinking. Always, always, always. Does it mean you could have 5% of your money in gold? It's not a bad idea. Or, well, Brian, I don't like gold, but I love Bitcoin. The one thing I would caution you about that hedge, though, is try to make sure that you're going to buy your hedge at or near the cost of production. You don't want to pay a hedge on an overly inflated asset price, because technically that's not a hedge. So I do like the idea that the gold market is trading pretty close to the cost of production. I mean, it might be about maybe 50% premium or something. That's not bad. But something like Bitcoin, where there are companies that come out and say that their cost of production is like $5, $6, $7, $8, $9, $10,000 a Bitcoin, and here we are 40, 50 G's. That's not appropriate hedging. I mean, hell, you might as well just go buy anything that's in the NASDAQ. Overlay your Bitcoin chart with the NASDAQ chart, and you'll understand exactly what I mean. Okay, hope that helped. Number 2, blocks. As part of the personal financial plan, bonds RS should be a part of one's portfolio. I struggle with the poor return rates on bonds. That said, I've been looking at both tips given current inflation and the TLT given location and that they're generally hated right now. Any views on building a bond portfolio in this environment? Okay, well, I like how you're thinking. What I would suggest you do here, though, is go and buy parts of the whole yield curve because the yield curve is going to fluctuate and go up and down as it moves through the cycle. I mean, hell, you can always go to AGF and ask them to manage it for you, but you're going to pay the MERs. And of course, penny wise, pound foolish, what I just said there, blah, blah, blah. But if you're going to do it on your own, like just even on the site, that we have we follow all of the different bond ETFs. So, and of course, all of them are bearish right now, eh? So, do we have the bottom ETFs? Yeah. So, I mean, this is the 7 to 10 years. This should be like the 1 to 3 years. 1 to 3 year, et cetera, 3 to 7 years, right? So they're 1 to 3 year, 3 to 7 years, 7 to 10 years. So boom, you instantly bought the whole fucking yield curve. That's not a bad idea. I'd also say too, I really like your thinking that basically this is the long end of the curve that you're buying. Both the tips and the TLTs, they're like 20-year plus paper. So my suggestion here is you want the whole yield curve spectrum. So you want the short duration, medium duration, long duration. I would actually prefer that you actually buy the bonds themselves. Keep in mind, the bond dealer, if you work with a brokerage house, I don't know how big your account is. Usually a typical minimum bond purchase is like, $5,000, $10,000. So if your portfolio isn't, a good 50 to 100 G's, stick with the mutual funds, or, in this case, exchange traded funds. But the bonds themselves, you should be able to buy like 3-year paper, 5-year paper, 7-year paper, 10-year paper, and then literally as the bonds mature and you get paid back the principal after the bond matures, you just take that money and reinvest it in the long end of the curve. My hunch is probably to pull this off because keep in mind, bonds trade on a spread basis, so there's no commission. So my suggestion is you call up a full service broker and you say, I'd like to build a bond portfolio. What are the commissions? And he should say 0 because they trade on a spread basis. The bond desk is going to buy the bond at, say, 1% in the marketplace, and they will sell it to you at 1.05%. Now, you're not going to see that difference. You're just going to get the 1.05% yield, which is, of course, a little bit lower price. But so what? The key here, and if you can remember this is a lot of shit to think about. But the key here is you want to try and buy bonds that are trading below par. And then that way they expire, they mature at par. And if they're trading below par and they mature at par, then you get a capital gain as well. So it's a nice little bonus treat. So, like my hunch, and actually I might even start doing this, is start looking at serious corporate bonds, the big telephone companies and stuff like that are not likely to go bankrupt. Utility bonds, those kind of things, to try and juice the yields a little bit, just get a little bit higher percentage return. You also might want to think also too, municipal bonds. They are tax free. So usually they trade at a little bit higher prices, lower yields, but tax-free is tax-free. And like I said, in fact, I even told Zach to try and do this: is call up your local government. He's in Hawaii, so I just said call up your local Hawaiian bond, your Hawaiian brokerage dealer, whatever, and say, do you have any Hawaiian municipal bonds? Then that way you're actually investing in your own community. Because usually those muni bonds go towards actually paying, things like the fire department and stuff. All right, so hopefully I've given you some stuff to think about there. And we can always talk more about this in daily briefs and stuff. How would you go about building out a bond portfolio? It's not a bad idea. Again, if you're dealing in some size, this penny wise, pound foolish, I actually think it's in your best interest. Don't go and fucking get a guy who's only had 5 years experience as a broker. You want to call up a brokerage house and say, I want to speak to a broker that has at least 10 years experience and that knows the fixed income market. And they should be able to send you to somebody that actually knows what the hell they're talking about. All right, next question. The PAMP. In the level 2 lecture on futures, you said that 5 to 7% price difference for 2-year period is not critical, and you classify such market as flat. What percentage should be considered as a market in contango and backwardized? Dead. I think you want backwardized. And the funny thing is trying backward Asian. They don't even have this word. It's so funny. We have all these words in the trader sort of vernacular that technically are not even in the English language. Like try and find what's another word that's not in retracement. It doesn't exist in the English language. It's so funny. Anyway, okay, so I remember when you asked this in class, and I guess the key here is keep in mind you've all gone through a historically abnormal market pocket window. In that, the best way to show this to you. Normally, actually, I'm trying a new search engine. I would prefer to move away from Google if I could. Oh, yeah, that's kind of cool. All right. So, not that often do we actually get down into these crazy ass, really, really low interest rate environments. And ironically enough, you might even argue that this is almost kind of like our MMT kind of weird sort of government intervention world that we live in. Here is typically what interest rates normally do, but you can see peaks and troughs, peaks and troughs, peaks and troughs. We've gone to obviously insanely abnormal rates here. But normally interest rates, the risk-free rate should be about 2 to 3%. That's what the normal risk-free rate is. And if you look over my entire, and keep in mind, these are long-term interest rates. So probably a better way for you to see this, although I think this is just price. It would be kind of cool to get, well, maybe we can. Let's see what we got here. Maybe we can do this. Let's go short term. Well, that's not terrible. Yeah, I don't really show you okay, here, this is better. Let's see what we got here. All right, so yeah, you can see here, short and long-term interest rates. So Federal Reserve short-term interest rate, long-term. I'm getting the impression that this is the short-term interest rate, and this is the long-term interest rates. So you can even see off of this chart, short-term interest rates do not often go below 2-3%. That's usually the normal, what we call the risk-free rate. In fact, when I started in this business, we used to, and keep in mind, I started back here. we used to always say, you want a guarantee? I'll show you 3%, right? Because that's what T-bills used to trade at, was 3%. And that's what we call the risk-free rate. And, probably to help you even more, whoever asked this question, oh, not there. Nope, not there. Where the hell was that? Over here. The PAMP is when we go into level 3, when we go into how do you value options. One variable in options pricing is actually specifically about what is the change in the risk-free rate. The irony of it all, though, is over the past 4 or 5 years, that risk-free rate has been basically nothing. So you're coming into the market trying to learn the market in a very abnormal window. Never discount the Japanese. Oh, yeah, there you go. Right? So when I said, keep in mind, like I said, I started out the conversation with you guys, when you're learning the futures market. When I used to be a futures broker, that was back in sort of normal interest rate environment. And even when I first started and recorded the lectures for this school program, 2013, 2014, 2015, 2016, we were still in a relatively normal interest rate environment. So if you figured that the risk-free rate, let's say, is 2.5%, well, 2 years times 2.5%, well, that's 5%. So in essence, and keep in mind compounding, if we say 2 years at 2.5% compounding, well, maybe that comes to, at the end of it, like 5.5%. So when I said that a 2-year forward contract is trading at a 5% premium to the spot market, of course, that's talking about I think I did that right. Let's see what comes up. Yeah, here we are. Actually, I kind of like the way that this search engine works. And it doesn't really matter. I mean, I wouldn't do markets that are in crisis right now. Unfortunately, that means a lot of markets. But let's maybe the copper market. I think the copper market's relatively calm. All right, so you can see it. In fact, actually, look at that. And who can tell me? Here is the last price. Considering that the current market is 473, and we can go all the way out into January of next year, and it's 471. 3 cents difference. Would we call that a flat market? I think so. So that's neither contango nor backwardization. I would call that pretty much flat. It's a little dangerous that it actually is a negative number. You can see the how do we say this? The backwardization is starting. Now it'd be really cool to look at, say, a dozen or so of these images, like say once a week. We took a screenshot of this and look at how the term structure itself is changing over time. For instance, the grain markets, right, like something like corn and wheat and all that, what kind of market is that? Is that backwardized or is that contango? Clearly, that's backwardized big time. And you can see just going out a year, right? We're spring 22. So spring 23, 1 year, and you can see that's almost a full $1 difference. What kind of numbers is that? $1, that's like 15% backwardized. Major crisis. And of course we talked about all what's going on in in Eastern Europe. I don't think it has anything to do with Eastern Europe, though. I think it has more to do with the fact that we have a major drought going on. And also, too, I get the impression that all this stuff moves in like 80, 90-year cycles. So who can tell me what was the major driving story of the agricultural industry in the 1930s and 1940s? Because that's basically about 80, 90 years ago now. So should we expect similar type behavior? Anybody know what happened 80, 90 years ago in the grain industry? Thank you, Andre. You're the only one who knows. Nobody else knows that. So, Dust Bowl. Well, that sounds like drought to me. And that's what's happening. You can actually see it. Now, it's interesting because the long-term weather forecasts actually have one of the worst drought parts of the United States. Is supposed to get a whole bunch of rain here. So we'll see what happens. But it is interesting to see that, like, when you go to Ag Day and you actually figure out what the hell is actually driving these markets, it has less to do with Ukraine and Russia and more to do with the fact that there's a drought going on. But anyway, that's here nor there. Okay, so I hope that helps answer that question. I wanted to show you actually a nice healthy market, but good luck. And actually, I think the gold market, surprisingly enough, is actually relatively healthy. Where is the gold market? There it is. We saw that. It's interesting to see that the copper is actually starting to slip into backwardization. So the gold market, yeah, okay. So you can see a bit of a premium here. So if we go out like a year, you can see that it's trading at about what? About $30 premium, like April 23. It's at 58 and we're at 28, so that's $30. So that's a 15%. What is it? Don't ask for World War II. Brian, it looks like you are running a marathon. Okay. Oh, look at what time it is. Yeah, I better get out of here soon, eh? Okay, yeah. So here, this is trading at about 15-20% contango. So actually, I would say that this is very healthily supplied, but actually, it's pretending that the gold market actually is really well bid heading out into the future. Not flat, and I would say even greater than that sort of 5 to 7%. And so what that means is that actually this is pretty strong bull market, and it's probably going higher. Okay, well, I hope that helps. We can always talk more about PAMP. Let me know in the daily brief tomorrow if you want me to go into more detail on that. Okay, after taking all 3 levels and getting into my groove with almost a year in the trading, I'm experiencing a bit more anxiety, stress, and perhaps a lack of patience when dealing with the public, friends, colleagues, etc. Is that normal because of the irrational behavior? Is it just me? Bear in mind, when I go back to my trading, I feel good. Your thoughts? I am going to say that once I have my way with you, it's going to actually be really difficult for you to talk to anybody in the public. And it's going to be even harder to talk to family members, because family members are going to want you to tell them exactly what's going to happen in the future. And we all know nobody should be in the business of predicting the future. Just don't do it. So what will probably happen if you've bought into the whole idea of the process is you're going to have to admit that you nor anybody else, none of your colleagues, knows what's going to happen in the future. Nobody. You have to identify where price is relative to where it's been. And so based on that, i.e., as the market's screaming higher, like I showed you with those ag plays, you're just not allowed to buy them. You're just not. And you have to look at your friends and family who are saying, are you kidding? Are you crazy? This is going to the man. You got to buy it now. You just have to look at them and go, I'm sorry, I'm not allowed to participate. Reload zones. That's what I do. And, even the tech stocks that everybody was all in love with 6 months ago. I mean, Tesla is a perfect example of that right now. How much is Tesla corrected from its peak? So we hit a high here of 1,243 and a low of 700. Almost got knocked in half. I don't mean to be rude, but I think there is a trade here, but I don't think it's like quote unquote a buy. But the point simply put is, we have to learn as traders. When you see a market doing this, the public's going to be all rah bull, and you have to leave it alone. Remember some guy a year or so ago. Going on. Technical analysis doesn't matter. Oh yeah, how you feeling now, buddy? So what I'm going to say, like I said, is if I've had my way with you, then I'm going to get you turned into an institutional type player, and not a public participant, which means that it's going to be extremely difficult for you to talk to the public, and it's going to lead to anxiety, where you're going to be like, the only place I can actually go and have realistic conversations with people is that silly TRI website. Everywhere else, they're idiots. I'm sorry. It's, the funny thing is that when I go and talk to all my broker buddies and stuff, they're like, well, yeah, that makes sense. All right. Yeah, that's cool. So if you talk to people that really understand what the fuck they're doing in this game, then the shit that I'm trying to teach you, it's pretty common sense. But not, why is it that 95% of the public can't do this job? They just cannot do this job. Well, it's because they have opinions. It's because they start every single conversation with, well, I think. You can't make money doing that, folks. It sucks. The irony of it all is making money from this game is you have to go, now that looks really interesting. Why? Because it was way up here and now it's all the way down here. So if I come in here now, what are the odds of just getting even half of that move? And I can guarantee you go to the public and you say, you know what, this is a pretty good place to have some money working. They're going to be like, you're a fool. But that's the way capitalist game goes. And I've been at this game with you guys in crypto now for what? When I started this game in 2013, we're going to be coming up on 10 fucking years. It's the same story. Nothing has changed at all. Not one fucking bit. Nothing has changed. And yet most people, does it not make sense that if you were excited about the crypto space, now is when you want to be most excited? Now is when the future millionaires are going to be made. But do you think the public's coming in and participating here? No. I said earlier that I didn't think that this thing was a buy, but what I do like for the person that did ask the question earlier, and I have to say this right across the board, I don't mind you coming in and accumulating a name like that. To me, that looks like a place to take a shot. The sad thing, of course, is that this is where the public talks about this stuff, or here. So, it's just the way it is. So, if we get nice big fat W's here, well, then Brian's going to go fucking all crazy ape shit. But coming in and accumulating here, I mean, you can see this accumulation zone down in here. Hey, you would have had to been a real badass to just step in and accumulate down in here, but look at what happened. There's a great story on TRI. A lot of people made a lot of money on this one. And I can comfortably tell all of you, I was pounding the table. Let's start buying. Why? This is everything that I teach you guys. Because we were at or below reload zones. And then, of course, the W comes in. And it's like, holy shit. And there's the end result. But is that a good idea to come in and buy up there now? I don't know. So, hope that helps. Yeah, you're right. A lot of your friends, it's going to drive you crazy, especially if you're just going through the level 1. Because right now, and actually you said you've been through all 3 levels, so that's good. The danger with most level 1ers is they always say it's really dangerous to have a little bit of information. So level 1ers, you're just getting introduced to this world. And you're going to be like running out going, reload zone, reload zone, reload zone, reload zone. But you have to put it into the context of 4-year market cycles, and you have to be really diligent in hunting for confirmed divergences. Then you have to really look at your fundamentals of your story and find out whether this thing's actually got any value to it, or if there's any sort of things that are going to get the pumpamentals going down the road. And then you have to look at things like price structure and can I buy W's? Then you have to understand risk management. How much is appropriate to put into this thing? And how am I going to approach putting my money into? Do I want to keep the actual asset on the exchange, or do I want to get everything the fuck off of there? And if I do want to get it off of the exchange and put it into cold storage wallet, how am I going to handle if the price doubles and I want to sell half and get myself a free position? Blah, 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 which is, of course, just all about money management and the whole damn process. So, actually, Grim even said this really, really well today. And I kind of like this. I've told you guys the story about the accounting firm and how I got a job there. And I told them I was going to stay there 1 year. And then after the 1 year, I was going to leave. And at the end of the 1 year, I looked at them all and I said, thank you very much for the fish. I'm out of here. And the directors looked at me and went, you fucking asshole. We just spent the past year training you and now you're fucking off. And I'm like, sorry, pal, I'm out of here. So I do like the idea that you're not even going to understand what the hell this job is as a trader, as an investor, until you do it for 1 full year. And then just because you know what the job is, that doesn't mean you're any good at it. And I actually listened to Grim today, and he said, you know, I've actually watched a bunch of people, and I think that you can actually become a professional and like really good at this, but it takes about 3 years. And I do like that because you're going to take a year to learn what the hell this job is, to learn fundamental analysis, to learn technical analysis, to learn ranging markets, to learn trending markets, to learn portfolio management, asset allocation, efficient frontier, to learn the process, building your trading plan. What does a log look like? What does a journal look like? What is my diary, my downloading, my emotional? How do I build demon finders? It's going to take you a full year just to learn that shit. Then you're going to take about a year to figure out, well, am I a ranging market state kind of guy or girl? Or am I a trending market state kind of person? That's going to clearly dictate what markets you're interested in and what time frame participant you are. And then after learning, taking about a year, identifying what setups really speak to you, Altangonators, bots, 3-step setups, Jesse James, whatever. I mean, we got a gazillion different setups, Davos, Kalinos. So that's going to take about a year. And of course, how many paper trades do we want you to log? At least a good 100. I mean, I love that thinking for Graham. If you think you know your shit, then I'm okay with the 2020, but that means you got to pick a setup. You got to trade 20 trades, paper trades, no mistakes. You understand what the setup is and you're rocking it. And then you got to take 1/21/10 account size trades, no mistakes, and trade that like a boss. Show me those 40 trades, trading that setup, and then, okay, fine. I'll let you head off to the prop firm, away you go. But most new people into trading, hell, you're going to fuck up half of those trades and make mistakes on them anyway. So if you fuck up half of them, then that means every time you make a mistake, I want you to start from scratch with your count. It might take you 20 trades just to get to the point where, number one, you know what a setup is. And then number two, you're actually taking the setup without making any mistakes. So believe it or not, that I think spills over to about 100 paper trades. And then finally, that last year, you're rocking it. You're managing money. You're seeing how live accounts trade. Graham is highly encourageous of everybody, and I think it's a great idea. I mean, if you really want to be a pro at this, go and invest a couple years in trading for a prop firm. That way you trade their money. You're not trading your money, and you don't have to worry, right? Because they'll keep you honest. And if you fuck up, there you're going to be like, sorry, pal, you're back in the penalty box. If you're actually really good at this, then you just fly through the prop firm. You make them a pile of money. They think you walk on water. You get a whole bunch of industry credibility, and they might set you up with $100 million fund. I've seen that happen. Well, a $10 million. All right. So I hope that gives you a pretty good idea of our expectations here and where you are mentally. Okay, number 5 blocks. Not sure if I missed it, Brian, but could you look at Luna? I just did. On the daily chart, it looks like a double bottom, almost an inverted head and shoulders. Yeah, but on that weekly chart, you're going to tell me you're coming in and buying that? Come on. I mean, at best, I suppose we could have made the argument maybe you come in and buy a little bit off of this range, thinking something like, and I don't really like this, but maybe that is your range. So there's your reload zone. There's a nice W in there. Maybe another one. So you go reload zone within reload zone. Okay, maybe that's attractive. Also, too, it'd be good to see a nice big fat bull div down in here, and then that would frame sort of expectations. And then finally, on just a dead cat bounce counter trend rally, can I get a half decent profit off with a move just up into here? Okay. I suppose maybe it's a little bit far, but maybe you could have thought bullish bot. So that's something like there to there. It's backwards, of course. And then, but this is huge. This is not a trade. This would be like investment. Yeah, terrible location. But you could front run the bot, and then that way you have a nice little bit of cushion. And those guys just had their move stopped to trailing level hit. So if we crap out here and we trip through this 25, then you'd hop off on that trade. Looking for some insane upside move up to 150. Coming in and taking a trade here, you're coming very, very late to the party. Huge risk. Could it move up here and hit this bot objective? Sure. I'm not going to do any old damn thing it wants. But as I said, for those people that did take this setup here, if we do crap out here, they're going to walk at a small profit. And there'll be a little bit of a profit on that trade. But if you buy here, that's just a coin toss. Just total coin toss. Could Luna be a short here? I don't really like shorting ideas until they actually have shown me that they have failed. And this thing the problem with this stupid Luna is you can't trust the actual price that's actually posted here. I got to maybe find an exchange that I can actually trust the price action. Because I noticed, and I don't know whether it's here, maybe I can trust this, but I noticed that when I went on Binance and I did versus USD, you can actually see they have different price prints, which is so scary. I do remember we had a site member who was like, okay, I'm going to take a short here. And this is why I didn't really like that trade, because this thing hasn't really broken down yet. If anything, people are probably looking at this going, oh man, this is a juicy short. This is a juicy short. Maybe, but I think I'd like to see it actually break first before I actually call shorts. And then, what that really speaks to is maybe we should listen to Sjord on tomorrow, because I think tomorrow is the day that he's on. And let's just find out whether there's new fundamentals actually driving this story. If there are no new protocols coming down the pike, if, the whole Danny situation and how they artificially pump the price up here to get that sort of 100 billion or whatever the fuck it was level on the stable coin level that Mr. Kwan said that he wanted to get hit, but it was a bit phony baloney. If we hear that kind of conversation from Sjord, then okay. But to actually go out and say, you know what, I'm going to recommend that we sell this thing, I'm just not there. I'm still bullish. I still got a shitload of this, even on the Trex account. And I'm still working orders to sell up higher. And my inclination, especially now that we're coming into the summer sort of silly season, is I would actually prefer if we did get serious pullbacks. Like, I'd actually love to see that this is the top end of the range, and that's the bottom end of the range, and we just start coiling in between here, and we do get W's down in here. I like the idea of actually hunting a long setup against these lows to try and play further moves higher. I suppose if I was thinking trend continuation, because we made a new high here, what time is it? Oh, fuck, I got to get out of here. Because we made a new high, I'll just try and quickly do this. I'm going to be counting. So 33 to 66. No. Yeah, there we go. It's backwards. It can come all the way down into here. It did do 33. So what I need is 3 higher lows. So 1, 2, 3. It wants to do something like this. All right. I can start thinking like that. But since it's just made a new recent low here, there's nothing for me to do on the long side at all. So because it's still pointing higher and making new highs, a bit early to be bearish. I like the idea of just spoon feeding coins to the market as they work this thing higher. It's what I do. Sell halves on doubles, blah, blah, blah. And if this is a range and we come down here on any kind of correction and we start showing signs, bullish divergence, market structure, hell, I might even seriously think about buying back some coins against that $40, $50 area. For the time being, I would say my knee-jerk reaction is there's your trading range. So probably a little too early for me to short and too early for me to even thinking about adding to the long side. So there you go. Okay, I'm going to leave it at that. Wish me luck with the boy, as always. Hope you guys enjoyed that offering. I hope I wasn't too political there. As I said, I'm not a fan of murder. I'm not a fan of bullies. I don't like murder. I don't like bullies. I don't care who it is. I don't like murder. I don't like bullies. So let's everybody get back to the negotiating table. Let's negotiate. Let's settle this in the market. Or, like as Alan said, maybe we should have like judo offs. And we'll settle this on the judo mat. I don't know. PMA for the win. Thank you very much, guys, for all your positive support and thinking about Liam. Thank you very much for the site. It gives me a great place to come and hang out. I understand that I am a bit of a character. You can only handle so much of the Beamish in doses, and I think it's probably not a bad idea to take me in doses. Hopefully what I do here is I just try and help demonstrate best practices. That's about the only gift that I have to all of this, is that I've been playing this sort of trading, investing game for a while. And I would rather you think about how badly things can go versus how stinking rich you're going to get. Um, I think we offer good value for membership dollars spent, and I think we're adding to the value proposition every passing day at TRI. We've got a whole bunch of great ideas, including I'm thinking about actually trying to get a physical campus for TRI up and running. And I have one place, actually 2 or 3 places in Portugal right now that I really, really like, and that I actually want to go and visit here in the late spring, early summer, and seriously consider getting that TRI campus up and running. So I'm super enthusiastic about the prospects going forward. I don't think we're a terrible shill. I think we give enough free content. We give enough away for free that I think it's an okay proposition. And then the stuff that we do charge for, I actually think we're giving it away at a very, very low price. So I think it's a win-win for everybody all around. Okay, hope you enjoyed the rant. Thank you very much for the best wishes for Liam. I love that stuff. Don't be a stranger. Pop on the site. We have the 30-day trial. So, you can always come in and just listen to what we talk about Monday to Friday. It'd be a great idea if you listen today to come in and listen to Stuart tomorrow, and he'll talk to you about things like Luna fundamentals and DeFi fundamentals, which I absolutely love. It's just another great sort of added feature of TRI that's just a hidden bonus that you would never even know, because I'm not really that good at DeFi. So that's a whole other part of this website that we could leverage going forward. So hit that like button, hit the subscribe button, ring Colleen's bell. Wish me luck with Liam. PMA for the win. All the best. And Chris, if you could take us on out of here. The only thing left for Brian to say at this point is a big bye for now.